So we're at the Bombay Stock Exchange this morning at the listing ceremony of Kwality Walls India Limited. Joining me in this very special conversation is the management of KWIL. I have Mr. Chitrang Goel with me over here, the Deputy MD of the company, and Mr. Prashant Premrajka, the CFO. Good morning, gentlemen, and thanks so much for your time. Let's begin by talking about this momentous day. Finally, pure play ice cream company listed in India. It's a milestone for the markets as well as for you. Talk to us about the price at which KWIL has listed, the kind of shareholder value that is still at the table. What are you making of these numbers?
So before we get on to the price, I think what's in the value of ice cream is more important.
Sure.
Correct? So we are in a category which is growing fast in India. We have a 70-year-old heritage. We started the business 70 years back as Quality, and then with Hindustan Unilever in last 30 years, we have just built the brand strength to strength. Right. It's also a moment because we are an independent company today, and it starts with a lot of responsibility. And how do we create shareholder value in the long term? What we see are three things: that ice cream is supremely underpenetrated in the country. How do we grow double-digit volume growth ahead of the business? That's in the market. That's number one. Number two is how do we drive more availability to our consumers, because India is growing, urbanization is happening. How do I go to a tier 3, tier 4 town with a superior cold chain infrastructure for our consumers to experience great brands like Magnum and Cornetto? And third is how do we serve the metro consumers with QCOM by launching more super premium and premium ice cream? I think all said, all these three things will give us a good volume growth, which will drive long-term opportunity for shareholders to make money.
Okay, so that's on what lies ahead. I understand that you're looking to grow faster than the industry. Now, the ice cream industry in India is expected to grow at a CAGR of 11% by FY31, roughly around those numbers. Will you be growing faster than that? Is that something you guys are forecasting?
So that is our intent. If you look at the Euromonitor forecasted growth rate of 11%, or if you look at some of the leading indicators like the distribution opportunity, consumption opportunity that is there in India, we believe that the category has got legs to grow in double digits in the foreseeable future.
Okay, and let's talk about competition. While none of your competition is listed, they're at least part of the organized space, and the margins that they're growing at is between 17 and 18%. KWIL right now is around 7%. Talk to us about what's the margin outlook. EBITDA expansion is one of your growth levers, if I understand correctly. So what is the outlook there, if you could throw some numbers?
So just to put the numbers in context, our FY25 margins were 7%, and we have also disclosed for the first 6 months our EBITDA were at 0%. The current level of EBITDA that we are going to have in FY26 reflects the investments that we have done to strengthen the supply chain infrastructure for our business. Going forward, the growth would need investments in distribution, in brand building, and also in the supply chain capacity. We have already identified pillars of procurement efficiency and bringing down the cost structures in manufacturing and distribution to deliver the medium-term EBITDA milestone that we have called out in our equity story.
So what would that number be, if you could share that with us?
So we should look at a significant EBITDA expansion over the next 5 years from where FY26 will end.
Okay, and you spoke about the need for capital expenditure going ahead to improve your penetration, to improve distribution. You have around 2 lakh units of distribution right now. What is the outlook on how you can improve penetration in a country like India, also where quick commerce as a moat is a very strong growing category? Are you going to be looking at specific SKUs for quick commerce? Is that something that's in the works?
If you look at the conundrum of growth for Quill, I think the first one engine is distribution. Because today FMCGs, pure FMCGs are at 13 million, carbonated drinks around 6 million, and ice creams are just at 1 million. So if you just do the math, there's a big highway for growth. I think if we continue to add 50-70,000 cabinets or more selling points every year, it will be great. So that's the ambition, that how do we build distribution further on and accelerate your presence in not only in metros, but the new urbanization which is happening across India. That's number one. Number two is how do you also play quick com, because quick com is an ice cream is a marriage made in heaven. So how do you premiumize, because quick com is also in growing in the top cities, moving into the second rung cities, but the consumer there looks for more premium experiences. How do we launch more premium brands? How do we get that offering much better so that we can navigate competition plus also win at the same time by those with those channels and those consumers who are looking for very international experiences? I think we have a moat to grow this business. One, for scale at distribution points, driving access on a daily basis, and premium brands like Magnum, which will drive more penetration in the metros and the non-metros for premium consumers. So I think we have all covered in the portfolio.
And just to put this color on it, it's an and mindset which we are working. So
Not
it is
an
about,
or, it's an and.
it's a distribution opportunity, it's a premiumization opportunity. We have to play in quick commerce, we have to make ice cream affordable for the masses. So we are working with the and mindset, and there are a lot of opportunities to grow the ice cream category and for Quality Walls India Limited.
So on affordability, the GST cut has also worked in the favor of your business.
Absolutely. This is a big structural opportunity that the ice cream category has got from 18 to 5%.
Correct. Has that led to any improvement in the elasticity or the demand for your premium end, which is Magnum, the top end of the shelf? Has that led to any more demand for that?
So we had dropped prices of Magnum even before the GST cut. So last year at the peak of cocoa inflation, we have taken a price drop, and the actual sales growth surpassed our action standard. Now 18 to 5%, we have taken the pricing corrections. The unfortunate part is the GST reduction happened in the last quarter of 25. As the season will kick in, we will get to understand more that whether the elasticities are playing out in the market.
Okay. And just on that seasonal bit, since yours is largely, or in fact it is a summer portfolio based item, how do you ensure that throughout the rest of the year your financials continue to be stable once the peak of the summer is behind us?
So we always say this in Quality Walls, life tastes better with ice cream. And when you're sitting on the sofa, everybody just works in a 30-degree temperature in a tropical country like India.
True.
So we live in a country which offers a 12 months of sales. So why not have ice cream whenever you are sitting on sofa?
Absolutely.
And delivered through a QCOM, or you pick it on the way while you are coming from your office. So there's seasonality in the business a little bit, or we say there's seasonality, but the way consumers are now moving towards Western desserts, the way consumers are ordering in home, this will plateau out at some moment of time. I will not comment whether it's more happening today, but in the long term, we will see Indians, or the way consumers will start buying ice cream will be all year round.
And quick commerce has already established that. So if you look
Sure.
at the seasonality coming from the quick commerce channel, that is much lower versus the general trade seasonality. So yes, the distribution and the right portfolio is the solution for reducing the seasonality over the medium term.
Right. And on that note, volumes. The last 5 years, your volume growth CAGR has been around 8.5%. What's the outlook on that front? Can we look at doubling it in the near future? Can we look at reaching the double digits in the very near term?
Yeah. So distribution growth, what we are driving is on a single-minded objective, take ice cream more closer to consumers. And more cabinets we put, more distribution points we add, will unlock that consumption. And hence we are looking at a double-digit volume growth. And that's what we intend to bring in the business, because that's the only moat to create a sustainable future of the company.
And any timeline by when we can cross the 10 mark?
So I think we have discussed this. It is how you really build out a 5-year horizon or a 7-year horizon will come to know, because we are opening, as we establishing this company right now. So if you have to say, Chitrang, what are the 3 priorities for us today? Establish the company, make sure you deliver a great season as it's coming, and third is to create long-term sustainable value. I'm not chasing a particular number of do we have to do 10 today or do we have to 10 next year, but we are just focusing on a North Star, double-digit volume growth in this company.
Sure.
And as the business is seasonal, there can be short-term volatility. What we need to keep an eye on that over the medium term is our average growth rate touching the double digits. You would see, if we break down the algorithm of growth that we have put together, bulk work of the growth comes from volume, followed by innovation, which is again volume, and a very limited amount of pricing that we are building into our growth algorithm that we have called out in the equity story.
Okay, so that's on your volume outlook, and the externals are looking in your favor. The raw material prices of cocoa, has that all now come down?
So cocoa prices have indeed come down, but input cost volatility or commodity cycles are part of the business.
Sure.
What we do is we actually take out the cost from our supply chain. After doing all the cost productivity ideas, then we pass a very calibrated pricing to our consumers. So that's how we manage it, and given that we know the ingredients well, we have got 1,000+ patents, access to 1,000+ patents, it gives us a unique opportunity to bring various sets of products to the consumer, and we have a full price piano for our consumers, so they make choices of at what price points do they buy the ice cream.
Absolutely. And lastly, I have to ask you about this open offer news that we've seen in the morning coming in from the Netherlands holdco, the Magnum holdco that is. Talk to us about how you're reading this number, the 21 and 22, between that mark that you've given this offer. Any thoughts on that?
So the process, the way it works in India is that the open offer has to be the higher of the SPA price. SPA is the share purchase agreement between TMICC and Unilever, and the independent valuation that TMICC must have done. So the higher of the two prices must have come as an open offer, and this is something what we understand has gone to the market today. We have not read the fine prints of it. So, but this is normally the regulatory practice that has been followed in the country.
Okay, but given that the listing price has been around 29, does this in any way undervalue the company or the stock?
No, it does not. In fact, the shareholders have got a share of Quality Walls India Limited, and they should believe in the category growth rate that is there for the next decade. And the Quality Walls is in a very unique position to capitalize on that growth opportunity. We are the leading market share player in the channels of future. We have got wide distribution footprint with 200,000 plus cabinets. We are a pan-India player. We have got access to all the global brands like Ben & Jerry, Talenti, Yasso, Cartador, and we have got access to those 1,000 patents. So which company is best placed to capitalize on that growth opportunity?
I think the question answers itself. Just lastly, I'm very sure I want to know, our viewers want to know, when is Ben & Jerry's coming to India?
Sooner.
Soon? Okay, lovely. On that note, thanks so much for speaking with us. Thank you so much, gentlemen, for your time.
Thank you for your time.